Stop watching this video and watch yesterday's video first. Okay, here we go. Let's start with this analysis. I'm on the 1 minute chart and I'm not on a relevant drawing set. There we go. Let's have a look at what happened today. Big down day, something like 7.5% down. Pretty big deal. There are a lot of lines here because today was kind of crazy. I wasn't really expecting this much support and resistance in the mid $18 range, but there was a lot of it. We started the morning with a big dump, right? And I want to zoom in on this, and this kills me. I had an order get canceled, or I canceled an order somewhere in here because I bought a put, but the price must have been this bar. I bought a put, but with a limit order, and it never filled because the price dropped so fast. So that was kind of frustrating because that was a big price range. That one bar had a low of 1907 and a high of 1943. Okay, 30 cents. That's a big deal, especially when you're trying to get a put to go from out of the money into the money. So I was a little upset to miss that. It's okay, I guess. It's gonna happen. Nonetheless, I did eventually enter into a put on this candle here, and that was a trash put. I say that because it expired today, and it was an $18 put. This is a really big risk. I have profits from this week that I could turn over into these really risky positions, and I did that. And that behavior needs to stop if I'm gonna make money. So here's my weekly performance. I'm green 3 of 5 days this week. I'm red today and Wednesday. And the biggest difference between those 2 days and the remainder are the trash puts. Trash puts on Wednesday, red. Trash puts on Friday, red. So no more trash puts for me. Well, I'll still buy trash puts. I mean, I love trash puts. They're the best. In fact, had the price closed below 18, which would only be 24 cents lower than it did, I would have made 200% on that single put contract. But that's okay. What caught me off guard was this big uptrend, okay? Right in here, you can see it. And this happens a lot, but I tend to pretend like it doesn't ever happen. This one, right? This was a big one. And this one was kind of small, but you can see after the price makes these big dives, it kind of swoops. Kind of like Mario. Remember how in those old Mario games you would fly by diving and then using the momentum to go upward? That's kind of what it feels like. Nonetheless, there was a big breakdown today after lunch, and I rode that wave down and down and down. And I really think the only noticeable implied volatility flip would be right here. And I say that flip by I want to identify that the implied volatility was rising while the price was falling, and there was a spike in here. You can see the implied volatility did spike and then started to drop again. Another weird spike here. I'm not sure why it does that all the time. There was this increasing volume trend towards the close, and this was my friend as the price dropped and dropped and dropped and dropped. I think I entered into 2 puts today. Yes. I entered into another put. This was not a trash put. This was a good put. An April 14th $18 strike. I bought it for $98, and I held it as it went red and then stayed red and red and red and red, and it was just red all day basically, until I finally sold it at the very end of the day for $100. So I made $2 on that contract. So you can see that timing is really everything. You need to buy the right contract at the right time and know when to sell too. It's really about timing. You can see that the market can drop and you can enter into some puts and still not make any money, which is okay. I'm not terribly upset by it, just the way it goes. However, I do want to say and point out that yesterday I said this is not a bullish reversal, and I knew that there would be other people calling it a bullish reversal, and I was right, which was kind of funny. At the end of the day, what happened? Boom, big drop down. And I would like to go out into the daily chart and into the weekly chart and show all that analysis too, but I just wanted this to be a quick video, a quick daily update, and I'll be doing another video this weekend with a lot more in-depth analysis. Let me give you a sneak peek here of what my charts are looking like on the weekly scale. Just gonna take a quick glance at the third V top. this, I say the third because there's a fractal going on. And I was saying we might see a handle. If there's going to be a bounce, it could form a handle. And that doesn't appear to be the case. Instead, we had what's called a long black day. So this could be the beginning of a vertical run down. And that's really what I'm waiting for. I'm waiting for four price bars like this, just one after the other. And if they all have a height and a range of, you know, whatever this was, $1.50, you know, that'd be another $6 down. That'd bring us down to 12. And that's actually right where my lead target is, at 12, well, it's 12.90. Nonetheless, a vertical run down would make sense and it would complete this pattern. RSI is just steadily working its way down. It's now at 44, which is below my critical level at 45. Once the RSI passes 45, I say, hey, this is moving in a bearish way, and it just continues to drop. So let's look at the volume really quick. Not a lot of volume. That's okay. You know, volume's relative. All through the decline, you know, you can see the volume doesn't have to be super high. It really doesn't. On this particular day, it was like 60K, and you know, that's about where we were at today too. Well, not really, 42. This volume was pretty low. Implied volatility did drop, which breaks my heart. I want to see the implied volatility rise on the drop, and maybe we'll see that if the downtrend continues into next week. I think the most important takeaway here on the daily is that this horizontal congestion zone, is being taken out, just dissected, and just in one more red day, and it's free fall. I really think that's free fall, and it's vertical run down time. So that's the third V top. I'm going to open up the measure move down to the third measure move down. Let's see here, the third measure to move down. Yes. And as you can see, this trend line here has been broken, and now we are approaching this trend line. And once we pass through this trend line, I think it's time to find an all-time low. Well, not an all-time low, but next major low. You can see that the weekly candle from last week when the price reached up to $34 formed this incredibly bearish tail. And then this week we had just an absolute dump. That is a crazy candle, very bearish. And you can see that the 30 period average, which is 30 weeks here, was just over what we had, 244 million, and this week we had 241 million volume. Pretty significant stuff is going on. I think the biggest takeaway is that we saw the RSI turn down at 49 and is now resting at 42. This would imply to me that we're going to have a bearish oscillation in the RSI on the weekly time frame. You can see that we didn't have the RSI quite reach oversold during these big downtrends. I think that's coming, and when that comes, that's when we're going to see a $7 or $5 price target reached. It's a matter of time, I believe. That's all I want to do. Quick video for Friday. I am up, or I'm down, $14 on the day. I'm up $43 on the week. I'm not sure how I want to keep track of that. I think I'm going to build a spreadsheet, and I'll do an RSI calculation so I can figure out what my RSI is on my account. And yeah, I guess some closing thoughts. I'm really having a good time on my Discord. It's cool because I like, it's just great. I just feel really good about having a place to go and be really nerdy and talk about charts. Like, it adds a lot of value to my life. It really does. So shout out to all my Discord people. And okay, that's all I got. Yeah, I'll make another video later.